Apple profit warning sparks risk-off trade. Guys, what's been going on then? So, yesterday evening, after the close of US cash equity trade, Apple issued a profit warning to its investors, right? So Apple basically told its investors, look, we're not going to make as much money as we said we were when we gave you our earnings update back in Q4. Why did Apple say this? Well, Apple were talking about how in China, they're experiencing a slowdown in demand due to the impact of the coronavirus. They also said that the coronavirus is causing supply disruptions, right? So they can't even get their products made. Obviously, coronavirus has completely shut down the Chinese economy, right? Factories not even able to run because although allegedly workers and men have returned to work, we've been seeing reports recently that factories have only got like half of their employees back and haven't actually been able to run. So Apple basically saying that they are feeling the effects of that. How did the market interpret this news last night then? Well, as you would expect, we saw downside in global stocks, right? Not just in US stocks, in European stocks, Asian stocks all came under pressure. We also saw downside in other risk assets, right? So what are the other risk assets? Crude markets, they came under pressure. AUD, NZD, CAD, the Chinese yuan, CNY and CNH, EMFX in general, all coming under pressure on this news, right? This is bad news for the global economy because remember, yes, the number of new cases every day does appear to be decreasing, but we're still faced with a massive economic hit because the Chinese economy is shut down, like I said, and we don't know how bad that economic hit is going to be. So Apple here basically telling us that it's going to be bad. What do you see when you see flows out of risk assets? You see flows into havens, right? So the other side of that market reaction was we saw JPY quite well supported. Government bonds like US Treasuries and the German Bund, they were quite well supported as flows went into those safe haven assets. Gold also quite well supported overnight. Looking ahead then guys, could we see a repeat of this exact headline? Quite possibly we could, right? There's going to be plenty of other companies, they're going to be releasing earnings in the coming weeks, potential profit warnings, right? Loads of US tech companies have operations in China that might be disrupted, or Chinese consumers are a big part of their market share, might not be buying because they're out of work. Definite risk of a repeat of this theme running forward, right? That's pretty much it from me for now, and I'll see you in the next one.